guys. Thank you for joining me in module 3. We made it. This is going to be this is going to be the fun module, right? So we've gone through a lot of information, but now I'm going to give you a trading plan that I have used myself to trade Forex, and it is tried and tested, which is going to be cool. So we're going to run through that. And then I'm also going to show you some real life examples of how to look for this trading plan and the signals, the candlestick patterns, and what we're looking for, right? So we're going to have a full explanation of what to do. I'm also going to run through some times when not to trade Forex. So we have touched upon this in previous modules, but we're going to go through it in just a little bit more depth for you guys to understand, because it's equally as important is to know when not to trade as when to trade. So should we get cracking? Let's go. So just a quick recap before we get into it. So we should know by now what Forex is. We know what the market hours are and why they matter. We know about currency pairs. We know what on earth a pip is. We have gone through the most important part, I believe, of learning to trade Forex, and that's lots, leverage, and margin. We understand that the costs involved to trade Forex. We went through rollover and swaps if you're going to be holding positions overnight, which we will be doing in this swing trading strategy that I'm going to give you. We also learned about some useless information, how to calculate that with the math that is involved. And we've also learned about technical and fundamental analysis. So the big question is, how do you use all this knowledge that we have just learned in the previous modules to trade Forex? Well, good news for you guys. We're going to go through that now. So I'm going to give you a trading plan, and I have literally spent hundreds and hundreds of hours back testing this trading plan. I've been live with this trading plan, and it has been profitable more times than it hasn't if you adhere to it and are consistent with it. The trading plan is designed to be a bullish trading plan, so we're only going to be looking for bullish plays with this because we're doing swing trading. So we might not hold them overnight. We just might hold it for a longer period of time than day trading. I must put a full disclaimer now. I actually do more day trading Forex than I do longer term swings or short swings. So if any of you guys want my day trading plan, then there's two things that you can do. You can join the real life trading community. So you can go on to www.reallifetrading.co.uk and sign up. And I always talk about my setups for the day. Or if you're not ready for that yet, then feel free to send me an email at dean@reallifetrading.com, and I'm happy to share my plan with you. Cool, so let's get going. So the strategy involves these ingredients. We're going to be looking at a bigger picture time frame, and that can either be the weekly or the daily. It's entirely up to you. For the examples that I'm going to show you today, I'm going to use the daily chart. That's just my preference personally. Then we're going to zoom into the 4-hour chart, and we're going to look for hammers at low RSI. And if it's between 30 and 45, then that's when we're going to play our bullish trades. If the RSI is above 45 to 62, then we're going to leave it alone as it's in a neutral zone. So that's the only ingredient so far. If you don't know what hammers are, then you haven't done your homework from what I set you for the previous model. So I suggest that you stop right now and go over to www.reallifetrading.com and find the free ebook written by our CEO, Jeremy Newton, which is called Candlesticks and All You Need to Know, or something like that. Failing that, if you've got an attention span like me, which is quite short, then you can go and check out reallifetrading.com under blogs, and you will find a superbly written article about hammer candles by Tracy Ball. So you've got two options there before we start going through the trading plan. So if you're not here live, I suggest you hit pause and go and do your homework. Oh, for those of you that have done your homework and are ready to go, let's dive right in. So hammer candles, these are my preference when looking for hammers. So ideally, I'm looking for wicks that barely take out the previous low. I am particularly impressed with a hammer candle that has volume increased. And we'll go through all this in a bit more detail, so don't worry. I like to try and place my stops below the prior pivots. Bare hammers are better with shaved tops. So if it's a black candle or a red candle, depending on what your bare your bear candles look like, your selling candles. So if they've got a shaved top on them, then I think they're better. And then we're just going to look for retest of prior highs, so old support, new resistance. So that's just some ingredients of the hammer that we're looking for. And then I'm also going to give you some hidden tips of how to look for the higher probability setup. So if you're someone who works full time, or you're looking to try and trade Forex for a second income and you don't have, a lot of time spare, then if you can look for higher probability setups, then you can get in and feel quite confident just to set everything up with your broker and leave it alone. So what do we mean by higher probability setups? We're looking at these type of things. So the hammer preferably has an upper shadow, which we'll go through, don't worry. The more people that are trapped, the better. And when I say the word trapped, I mean, if you think about it yourself, so forget trading in its entirety. If you was trapped in any situation, if you was put into a big box, your natural instinct is going to just try to escape at all costs. So if you imagine that someone or a trader is trapped into a position and they've gone short in a position, and then they can see in front of them from the chart that they've got their decision wrong, then they just want to get out. So the more people that are trapped, the better, because in order to get out of their position, because they've shorted, they're going to have to buy to cover, which causes more buying, which then increases the buying pressure, and the price goes up effectively. And that's what we want, because we're looking for bullish trades. So that coincides with this. If we are looking for bearish volume that gets taken out on the 4-hour daily and weekly time frames. So don't forget, these are high probability setups. So just giving you some ingredients that you can look for, and I'll give you some examples shortly. There needs to be space between the hammer and obvious pivots before taking the trade. Like if you can imagine, if there's a clear resistance line in front of you, then we need to be mindful of that. I wouldn't take that personally. So we just need to make sure that there's some space and the risk to reward ratio is adequate. Hammers that are followed by inside day candles are one of my favorite things to look for. If I find a hammer followed by an inside day candle, then that's a really high probability trade that I would like to go bullish on. And what do I mean by inside day candle? I just mean if you had a candle that looked like this, so say we had a hammer, and then the next candle was engulfed inside of it. So it's actually, as you can see, it's literally inside that candle. Exactly what it says on a tin, an inside candle. Lastly, hammers that are low. So when I say low, I mean low in position, especially if the price went up and pulled back. So what do I mean by that? If the price comes up and then pulls back, and then we can find like a hammer somewhere in here, then we could look to get in with an entry there and a stop there, and hopefully we can catch the next break upwards. So essentially, that's the higher probability setups. Any questions on that? Good then. So, like anything with trading related, we have to have some rules. Otherwise, it just becomes anarchy, and that's not good for anyone, right? So the best way I can describe it, and I heard someone say in the community, is if you did something wrong in your in your place of business, if you've got a job or you've got a boss, or there are going to be some consequences. So in order for you to stick to your trading plan, it's good to have some consequences, and it's also good to have, which we call pain, but it's also good to have some pleasure, some reward if you stick to your plan and you become profitable. Then, so we're just going to go through some of the rules, and then I'm going to give you my example of my pleasure and my pain, and feel free to change that to something that's going to affect you. But I like to say trade fewer currency pairs. Now, the reason why I say that, it just gives you a little bit of less things to work out. So trading can be as simple or as complex as you want. For me, it's always better just to look at a few currency pairs every day and try to find my setups just while we're learning, right? So like I said before in the previous modules, I only really trade between 7 and 8 currency pairs anyway, and that's because I'm a day trader, and also because I only trade the major currency pairs to reduce my expenditure, so to reduce my cost to trade. So I would suggest to start off with that maybe you just look to like 3. I think 3 is a good number to start with. It just helps you zone in on looking for the setups rather than constantly scanning through a whole load of currency pairs. So don't be tempted to overtrade. Just because it's a 24-hour market, you don't be looking for or forcing setups or trying to overtrade. One, that's going to incur more cost from your broker anyway. But secondly, the whole point and purpose of this program is just to help you understand how to trade Forex and then give you something simple to go and scan for and look for so you can become a better trader. And then once you've done that and you can prove that you're profitable to yourself over a certain period of time, then you can start taking more trades. But take things slowly and become a pro at it, and then sort of scale it from there is my recommendation. So you don't only have to look for hammers. We are going to be looking at hammers in the examples, but you don't have to always look for hammers if you want to try to look for more opportunities. You can also play bullish engulfing patterns and tweezer bottoms. They are equally as effective as hammers in Forex. So we can go through that. If you have done your homework, you will know exactly what I'm talking about. And if not, this is another reason for you to go back and check out the articles and the ebooks that are recommended. If there are more than 3 bullish candles in a row, then we wait for a pullback. So what do I mean by that? If we get 3 white candles or green candles, dependent on how you've set your charts up, then if we have something like that happen, and then this is like a hammer, really poorly drawn hammer, but say we had, and they're all bullish candles, 1, 2, 3, then we're not going to get in on a break because the move might have already happened. So we're going to wait for it to come up and then come back on a retest or a pullback or whatever terminology that you want, and then maybe get in around that price with the hope that it springs back up into the green. So does that make sense to everyone? Awesome. Cool. So if I see a large candle of any color by the retest, so if you're a believer in what our CEO says, Jeremy Newsom, then he believes that long candles normally retest 50, 60%. So if there is a big candle like that, then I'm going to look to get in at somewhere 50, 60% on a retest. So that's what I will play, and it works quite effectively. So I'm just giving you some extra stuff to look for once you have mastered looking for hammers. So feel free to reach out to me if you want these slides so you can go through the plan again. Again, I must reiterate that this is a plan that I have tried and tested for numerous times, and it worked for me. The reason I switched to day trading rather than sticking with this is, for one, I needed to create more cash flow because I want trading to be my full-time position. But also, secondly, it's because the way I am wired, I needed more action. So for those of you who are just happy to set something up and walk away and make lots of money, then great, this is for you. But if you're like me and you need some more action, and you love the thrill of everything when it comes to trading, then I do day trading, and feel free to reach out to me if you want my day trading plan. But I'm a lover of the process of trading. I fell in love with the process, so win, lose or draw, I love it. So hence the reason why I day trade. Now, there's also, as I said, about some accountability. My pleasure is every time that I stick to my trading plan and I decide to pull some profits out, I normally book something fun with my family. So that could be a weekend away, a holiday somewhere. Normally because my wife tells me to, but whose wife doesn't, right? And my pain is I have to take ice cold baths for 3 weeks if I fail to stick to my plan. So if I don't do something that my rule base has allowed me to, and I end up losing on a trade or even winning on a trade, then I have to go through my pain barrier. And I really, really passionately hate the cold. I can't stand the cold. So for me, that's a really big stick that will whip my backside if I break my trading plan. So it allows me to stay on track, and it just gives me some accountability. You don't have to have those as your pain and your pleasure and your pain. You can have something that's really going to affect you, but try to have something that you're going to follow through with. Otherwise, there's no point having them. Cool. So we have the plan, we have the strategy, we have the rules. So let's go into some real life examples, and I'll just talk you through those step by step. Any questions, if we can wait to the end, then that'd be great. And then we can just literally get through these as quickly as possible so you guys can get off for the rest of your day or evening or morning, wherever you're tuning in from. So like we said, we're going to go on a larger time frame, and we're going to look at the daily chart. And this is where we're going to plot our support and resistance. So This is what I've done here. As you can see, I've got resistance lines in here. Reason being is and they're all arbitrary. So I'd like to point out at this stage that there is no right and wrong in where you put your daily support and your resistance lines. It's an arbitrary number. It's down to you as an individual. For me, I just use them as guidelines. I don't use them as, rigid. They're just guidelines, so I know that I'm not going to do something stupid like get in, up here. I don't want to enter a trade if I see that candle and think there's a high wave candle there. Let me set up with an entry there, and they stop there because resistance is right in front of me, some obvious resistance. So that's what I look for, really. And these are my lines. These are what my eyes are drawn to. And once I've got that done, then I would zoom in to the 4-hour chart. And then I look for an obvious pivot point. So I try to use pivot points as my targets when I'm getting into a trade. But I try not to do too many, because I think otherwise, your screen gets a bit messy, and that could also deter you from taking trades and putting you off, and then you end up just won't doing anything. So I just try to look for some obvious pivot points. So on this occasion, the reason why I've come to the conclusion of this pivot point is for a couple of reasons. One, there is a flat top candle that literally this shaved top candle that just my eyes were drawn to, and there's the price action around here and here. It just seemed to stop every time it reached that point. So for me, that's good enough for me to think, okay, that's a pivot point. I will use it as a target when looking to enter a trade. So step 3, we're going to look for hammers that form near or at support levels, or if there's any pivot points that the hammer is forming in as well, that's also good. And we need RSI to be below 45. So don't forget, in terms of hammers, as we're moving forward, we're looking for the hammer that has a small upper wick. Ideally, if the lower wick is below support or just breaking support and goes beyond it, then good news for us also. And then if there's an increased volume, that's an added bonus. So the hammer candle that we've got here, as you can see, first and foremost, let's just check, is it at low RSI? And we can clearly see that it is. Okay, so it's below 45. It's got a little bit of an upper wick, which is good. It's forming at a support level. You can clearly see that it's forming at a nice support level. So this is actually a really good candle for me. I like the wick because it actually pierces through the support level. So we know that people are trapped, right? And yes, it's a decent body, not too big, not too small. So for me, that's a decent candle. I would look to set something up with that. Good risk to reward ratio as well between entry and the pivot point, which we'll just touch upon now. So this is how I'd set this up. I'd set it up with an entry above the candle and a stop loss below the lower wick, just giving myself some wiggle room. So it's not a hard stop. And in total, it's, as you can see, it's a really good risk to reward ratio. Now, I'm not a mathematician and I'm on the spot, so I can't do this very quickly, but all I know is that it's more than double. It's more than double my risk to reward, right? So, we're risking 55 pips to try and make 129. Now, that's a very good trade if that comes off. So yeah, for me, the risk to reward's there. Now, depending on what lot size that you're trading. So if you remember when we were speaking about lots, if you're trading one standard lot, and if we just go back to the original example, we had GBP USD, if you remember rightly. And when we worked it out, it was around £7, and we had £7.34 as a pip movement. Do you remember when we worked out the value of the pip, and it was £7.34 in terms of every time that the pip increased or decreased? I have been pointing out, I must say, and good credit to one of the guys in the community, John Axe, who's a good friend of mine and looking after me. He actually pointed out that we got the calculation wrong, and it should have been 7.43. So you can see where the confusion lies. So that's what the price should have been in terms of the increment in module 1, I believe. So just bearing that in mind, what I'm trying to get to is, £7.43 times 55 becomes a very large number. So ideally, we're not going to be trading one whole lot. So we'll probably trade like 0.01 of a lot just to make that nice and give a risk to a risk number or a risk unit, nice and sensible. So again, just to reiterate, just make sure that when you're setting up your stop losses that you are figuring out what lot size you're trading, because otherwise, that's going to become a big number. So getting back to the trade, yep, risk to rewards there. It's risking 55 pips to make 129. We're good to go with that. Let's just see what happens then when we get into the trade. So we set that up, we go to our order to the broker, we put it in, big candle comes in next. Okay, cool, we're triggered. And I said, look, don't panic. Don't panic. The reason why I say that, because I've been trading for nearly 3 years now, and every time I'm triggered into a trade, it's just human nature. As soon as I'm triggered in and I hear that voice come through or from my broker, the natural thing that I think, have I done my analysis correctly? Is this all going to go in the right direction? I don't know. So it's just human nature. So you just get used to that, right? But that candle comes in, really big bullish candle. I love the fact that it's got some volume coming in. So yeah, I'm quite happy at this stage and excited to be in a trade. I'd rather be in a trade and have a 50% chance of winning than not be in a trade and just have a 0% chance of winning, if that makes sense. So what would I do here? Just bear with me. So, the second candle comes in, huge bullish candle, huge bullish volume. The question is, what do you guys think that I would do at this point once I see that second huge candle come in? And look at the size of that. It's huge candle comes in and the volume is huge as well. What would you think I would do in that situation? Yeah, that's right, John. That's it, mate. Perfect. And this is exactly what I would do. So I would move my stop. So I just see some big bullish trend come in. Volume's there. I'm already in a trade. I don't know if that's its peak and the run's over. So what do? I just move my stop. So I move my stop from here and move it into this position. Now, sometimes I can be known to be too aggressive when I'm moving my stop. So just be mindful of that. But the good thing once I've done that is, as you can see in the quote, I've just locked in my profits. So now I can't lose on this trade. So I'm either gonna win small, or it's gonna hit my target, and I'm prepared to wait and see what happens with that. And that's it, really. And then boom, we hit our target, 129 pips, which is phenomenal. And I think that's done in just over a day from this period to here. So 129 pips in just over 24 hours is a great trade. There are harder ways to earn that type of money, depending on your lot size, for example. But and that's it, and that's how effective that the strategy works. And you can literally just set everything up in your broker and set it up and walk away. Okay, make sense? Oh, perfect. So let's just go through a couple more. Real life example, trade 2, bear with me. So again, back to on the daily chart, on the wider time frames, and we're just setting up our support and resistance. I'd like to reiterate again, arbitrary numbers, just where you feel comfortable, where you can see that the price clearly stops moving. So that's how I've got mine. Trade 2. Step 2, I should say, we then pull up the 4-hour chart and we're trying to pick out some obvious pivots. These are where I've got mine. Again, the reasons why is it's just some action that just pauses in and around these positions for a period of time. So, and that's what I look for. You can just see it just pauses when it gets around there and bounces in and around there. So that's clearly a position where some battle goes on, and they're the points that I look for when I'm looking to either enter or get out of a trade, especially in Forex, as we said in one of the earlier modules, that the price retests all the time. So just be mindful of that. Oh, now we're looking for hammers at low RSI. So there's a good hammer. As you can see there, nice lower wick that is forming just around the daily support. It's very hard to see, but there is an upper wick there. Some brilliant bullish volume that is coming in with it as well, and it's low RSI. So for me, again, ticks all the boxes. But what does the risk to reward ratio look like, and would we set it up? That's a key ingredient. And you can clearly see it's pretty good. So we're risking 33.5 pips in order to make 89.6 pips. So again, risk to reward is there. There is nothing deterring me at this stage to say that I won't take this trade. I also am really excited about this trade because look at this huge bearish trend that is happening. And when that big bullish trend comes in, I'm thinking, is that the end of the trend now? And are all these people that shorted up here or here or here, are they all buying to cover their position now and taking their profits? And that's what's caused that. So there's two things that can happen at this stage, right? This could just be the continuation of that and it could pull up and then reverse on me. Or we could have caught somewhere near the bottom and we could actually make that, we could make our profit from it, right? I don't know at this stage, but at the moment, I'm following my plan, and my job as a trader is just to follow my plan, and everything is telling me that this is what we should set up. Does that make sense to everyone? Perfect. Cool. Well, let's just see what happens. And as you can see from here, we are in the trade. No, cool. Okay, so we're in the trade. So as we're in the trade, this happens. So we get triggered on this candle. Comes back down, bounces around that price. Then I think, okay, I'm over the moon. Here we go, we're off to the races. And then I get this big bearish candle comes in. And like I said earlier, is this going to be the rollover? And we got it wrong. So, and that happens, right? We're going to get trades wrong in trading. I'm only human. I get nervous at this stage. But I trust my plan. I've figured out how much 33 pips equates to when it comes to my risk unit. So I've adjusted that by using my lot size. So if I have a risk unit of $100, then I will, if I know that 33 pips is where I need my stop, then I will tweak my lot sizes in order to try and get as close to my risk unit as possible. So, and that's what I do. So literally on your broker, you put in your entry level and your stop loss, and then it will tell you how much you are risking in monetary terms. And then you can go onto your lot sizes and you can just keep plussing or minusing that until you can get to the monetary value of your risk unit. And it will tell you how many lots that you have used in order to get to that value. Does that make sense? Up in a Y if that makes sense for those of you that are here live. Oh, excellent. Good stuff. So, yep, I'm nervous. Not sure what's going to happen. Let's just see. Boom. Okay, now I'm happy. Now I'm happy again. We're back in. So basically, what do you think I'm going to do from here? So we got in here. Price has come up. It's come back down. Then we're in, and I think I'm winning. Then it reverses on me. Now I'm criticizing my life. We get back into a green position, slightly into a red position, and then I'm back fully in the green. So in your opinion, or in anyone who's here, or what do you think is going through my mind, and what are my next steps that I will do? Right, I moved my stop. I've already gone from green to red to green, and the price has not really moved that significantly from my entry. So I am just thinking to myself, I am going to put my stop, I'm going to move my stop so I can't lose on the trade. Now, just for this purposes, because when we were creating the slides, I actually moved my stop a lot higher than I would have done in this position. I just wanted you to see that I moved my stop loss. You can see like here, just so you can see the text. But what I would have done if I was trading this, I'd have just moved my stop to like break even. So once I'm back in the trade, I'd have moved it to my entry level. So I'm break even on the trade, so I can't lose on it. I also can't win on it at this stage unless I take my profits now. But I'm just prepared to see if it will hit my target from this position. Does that make sense? Nice. Oh, and this one worked out. So we stuck to our plan. We didn't get nervous. We managed our trade once we was in it, and we did really well. And we've earned now 89.9 pips. So good trade for me. Yeah, that's right, Terry. Now you can do that. Just for those of you that were on the recording, we just had a question from one of the guys, and he said, "Look, would you have not just continued, manage your stop, so we could have moved our stop to here and then just see what happened?" Because it's literally just broken above that the pivot point, a very slight close above, So why not just move your stop and then see if it does something like this, which is a very, very valid point. And my answer would be, I like to take my profits off the table as quickly as possible, especially when trading Forex, because these lines and pivot points and resistance and support lines, they are retested frequently. So I wouldn't be surprised if it hit that and then reverse straight back down. But as I said to you previously, if you're trading the major currency pairs and you're with a decent broker, then the spreads are going to be small. So I would take my profits here, and then I could just wait. I would just wait to see what happens. So again, if you took your profits here, then if this does happen, then you can just get in on the retest again and just play that again. That way you've locked in your profits for that trade, and then you just enter a new trade and then use the daily resistance as your target. So yeah, exactly. That's it. Lock in your profits, take the money from the market, and then play it again. And it's a very good point. That would be a very good trade and a very good plan. You've just planned out your trade in the future, and that's what I truly believe that everyone should do. Is for me, I planned out this trade. I planned out to get in here and with a stop here, and that was my target. So I've told the market what I wanted it to do, and if it does that for me, then there is no reason for me to think, oh, I wonder if it's going to do this now. Take that profit off the table and then plot the next one. Okay, now if it comes up here and then retest that point again and hit daily, then I'm going to get in before it hits daily resistance. Simple. Just keep telling the market what to do, and if it does what you tell it to do, then take the profits from that. Take the accolades. Give a virtual high five to everyone. Exactly. Good stuff, man. But good question. I love that. Okay. Last example. Then we're going to run through some times when not to trade, and then anyone that's here live, I'll stick around for some Q&A. Cool. Step one. Again, we look at daily resistance, daily support. Where does the price stop moving? Where does it? Where are going to be our targets and things? We know this by now, so we've got them drawn on. Step number two, we go into the 4-hour chart and we look for pivots. Again, I went for the pivot where I've placed it. Look at this price action. I just sort of paused in and around there, bounced up, hit that price a couple of times, finally broke it, then come back straight back down to it and bounced around. So for me, that's a very clear pivot point, and I looked use that as a target. Cool. Hammers lower RSI. Can we see that here? Clearly we can. So it's a hammer. Again, you can't see on the drawing, but there is a very small upper wick. I like the fact that the body is literally on the support line. The wick, the lower wick has pierced below it. We've got big bearish volume coming in. Big bearish volume coming in here. And the reason why I like that in this position is because of all of this bear trend that has happened. And is that going to be the end of the bearish trend? Who knows? But it's a good position for me to be in, and it's low RSI. So again, it's ticking my boxes on my plan. Now let's just see if the risk to reward ratio is there. So once I've got that established, okay, we're risking 27.7 pips to make 82.3 pips. Phenomenal risk to reward. I would get in with an entry above and stop just below with some wriggle room. Perfect. Making sense? Nice. Boom. Next candle comes in. We are in the trade. Perfect. Nice candle comes in. Bullish candle triggers us in. Bullish volume is now coming in. So, yep, is that the end of the trend? Feeling confident at this stage. Boom. This happens. Yep, they're not all winners. You will have losers. We got stopped out. So, you can go back and have a look at things and would you set things up differently? But, we've only lost out of 3 trades. We've lost 1, so it's not bad. And the amount of pips that we've lost is 27, which is the lowest out of all the trade setups that we've had. And it's just one of those things. We got in on a trade, didn't really come back. Before we got saved, this time we didn't. And that's it, and you can't win them all. You could be looking at it thinking that you've got the right sentiment, so you're still going to be looking for a bullish entry, and then you could try and play maybe this hammer. I'm not sure. It's entirely up to you. You could get in with a entry there and a stop there, and I'm hoping for you that the next candle will break in, come back down, and go up. I don't know. It just could just literally be a bearish continuation pattern and come straight back down. But we don't know what's going to happen when we trade. But we can only use probability, and the probability for me looking at this trade was it was going to be a winner, and it wasn't. Okay, so can't win them all. So you can clearly see how you can play this strategy. Do we have any questions on this? Is there anything that you want me to go back over? For those of you that are watching the recording, then any questions on anything that we have been through for the last 3 modules, you can always reach out to me at dean@reallifetrading.com. I live for this stuff, so you can never bombard me with too many questions. Just hit me up. Excellent. Right, final part of the calls. Can you believe it? We're nearly there. It's been emotional. So we know when to trade, we know how to trade. So when do we not trade? Now, I just want to reiterate that we've got when do we not trade. It's just when to be wary to trade. You can trade these, and I have traded it during some of these periods. Sometimes it's worked in my favor, sometimes it hasn't. It's just things to be cautious of when trading. But there are several scenarios when it's inadvisable to trade because of the volatility. Okay. Cool. So sometimes my drawing tools up. So bank holidays for one. Now, depending on which country you're in, so for example, where you have a bank holiday coming up in the UK on Monday, so there's going to be less opportunities with GBP. So GBP won't trade, won't be many trading opportunities. It'll be quite low in volume spikes and quite low in terms of how many people are trading that currency, because all the banks are off, and the banks are the ones that are the biggest pushers for Forex. They're the biggest price movers because they've got deep pockets and they have to do all their reconciliation and they exchange money and all that type of stuff. There's some bankers out there, more about that stuff than me. So that's quite low opportunity periods for me. So for me, I wouldn't trade anything GBP. You can still trade USD, CAD, or USD, Japanese yen. I'm not sure. Oh, apparently, okay, how's your luck, right? So I've just been informed that it's also a bank holiday in the US on that day as well. So Monday the 31st of May 2021, for those watching the recording, is a bank holiday for both GBP and USD. So then that would be a pair that you just wouldn't trade at all. Okay, so, but you get my understanding. It's, if there's a bank holiday, then you're not going to get that many opportunities. Market open, market close. So very similar to stocks, like we said in the previous modules, the market open, a lot of people are getting into trade or getting out of trades if they've been holding them overnight. So that just has, and the same with market close, people getting in and getting out of positions. It just means that there's just a lot of volume spikes and it becomes a little bit unpredictable. So when I say market open and market close, I don't necessarily mean on a Sunday night all the way through to Friday evening, those type of times. I just mean more so like the sessions. So just be careful when trading, the London session open and the London session close. So it's like 8 a.m. UK time and 4 p.m. UK time. So be mindful of trading in and around those, because it just becomes a little bit unpredictable. Again, please go on and check out forexfactory.com. It has all the session times when they open and when they close. So whatever currency pair that you're trading, just be mindful of market open and market close, because it is, again, a little bit unpredictable. Speeches. So any speech from prime ministers, presidents, leaders of banks, anything like that, because again, that causes high volatility, which can be unpredictable. Especially if they're talking about some new policies that they're going to unfold, or we're going to talk about it in one of the slides at the bottom, I think, or one of the icons at the bottom. But unemployment rates, interest rates, gross domestic product, all of that type of stuff. Just be careful when anything like that is being spoken about. It does cause some unpredictability. Very similar to stocks. When earnings are around, people are trying to second guess what they believe a company is going to report. And same with Forex. They're going to try to predict what a country is going to be doing and how they're going to be, if they've grown, if they're shrinking, if they're in crisis. So just be mindful of that. Normally, I would, if it's a high impact stuff like this, then I wouldn't trade that anything that affects that currency pair. Or if you're a little bit of a risk taker, then just be flat like an hour before and an hour after, just to let all the volume volatility calm down, and then you can start to trade in some normality. That does coincide with like erratic periods. So things like when COVID is first reported, I'd class as obviously an erratic period. Brexit would be an erratic period. So just be careful of anything like them moments, black swan moments and stuff like that, right? It's erratic periods of time. So just be careful of that. Weekends, yeah. So the weekends are on there. You can't trade if the market's closed, but it does open on a Sunday. I don't trade on a Sunday myself. Just be mindful. It's just flat. There's not much opportunity. So I can find better times to trade and better use of my time rather than looking at flat charts. This coincides with, I think people have just put these icons on here just to make them look pretty, because they all sort of coincide with each other. But like news reports, we can say, so anything like news related, if there's going to be, unfortunately, war or oil prices was a good one recently. The release of oil prices really affected the currency market. So just be mindful of things like that. I'm going to tie these two together, actually, December and summer holidays. So these are quiet periods in Forex, and the reason is, and the simple reason is that's when most people take their vacations or their holidays, especially all the people who work in the banking world. They're all on their Christmas party, so not much work is being done, and summer holidays is when they go and get their downtime. So why not join them? Why not use either some time in December or some time over the summer holiday, August time, to take a step back from trading, get some rest and recuperation and relax, and then come back ready to go again. That's what I do. ISM manufacturing data, interest rates, announcements of NFP. So that's non-farm payroll related stuff. So again, we've touched upon that, but interest rates, GDP, unemployment rates, all of that type of stuff. Just be mindful when they're all coming out. And it's a lot of information that I'm giving you. It seems more complicated than it is. This stuff doesn't happen all the time. There is news released all the time, but all this stuff, all the high impacting stuff is not a frequent thing. So it's just go on to, again, Forex Factory and check those out. So I've given you some warnings of when to be mindful to change. So it's not literally when not to trade, just be mindful of when to and when not to. And now I'm going to give you my preferred time to trade, just to make things a lot simple for you, right? So I prefer to trade on a Tuesday, Wednesday, and a Thursday. And the reason being is Fridays for me are too unpredictable, people getting in and out of positions and things like that. And Mondays are pretty flat, normally because it's been the weekend and people are in meetings and there's just less people doing actual work and just getting over the weekend, depending on how heavy it's been, I suppose. So I always find that Tuesday, Wednesday, and Thursday are the best times to trade. Me personally, I like to trade from noon UK time. That is supposed to be an N up until around about 4 p.m. in between doing other stuff. But that's my sort of favorite time to trade. And it is literally because I like to trade the UK and the New York crossover session. So that's it. That's my perfect time to trade. And it's good for me to have a routine and input a routine, especially because the market is running 24 hours a day, 5 days a week. It's just a good idea for me to have some routine so I can get on with the other duties that my responsibilities as being a real life trader holds me to. Any questions on those? Perfect. Well, cool. Look, guys, we've done it. We've reached the end of the Forex basics and how to trade it. I'd like to thank every single one of you who has joined me live, and every single one of you that has requested not only the videos, but the slides after as well. It's been an absolute pleasure for me to be here with you guys, and this is my first time. So yeah, just anything that you need from me, reach out to me at dean@reallifetrading.com. If you're in the Slack community, then just give me a shout on Slack. If you're not in the Slack community, then go and join the Slack community. It's a no-brainer. Come and join 600 plus traders where we trade all things stocks, futures, options, Forex. And we're enriching lives, and everyone's being enriched in their own person and growing as a human, right? So come do it. I'm going to turn the recording off now, but I am going to stick around to answer any questions that you guys have. But it's been an absolute pleasure. Thank you so much. Love you all. Love life, live life, and trade it.